So I want to do another Pips Wizard Pro as a swing trading strategy. And I wanted to do it for the month of August. My last video was in July. Because it's swing trading, I don't need to do them very often. Let's just cover a handful of currency pairs to see what has happened. Now remember, if you see my other videos with Pips Wizard Pro, you want to trade in a market that's trending. And you certainly would like to trade in the direction of the trend, even though you'll get trades counter trend. Whether you take them or not, it's entirely up to you. But if you're going to swing trade a strategy like this, depending on your level of expertise at technical analysis, I would just stick with trend following for now, unless you can see certain trade setups, such as right here, actually. If you just take a look what we have here, and just draw a line, you can see it. We've got this peak up here, right? Just draw your line through it, right? All we have here is resistance level. Price comes back up to test it, right? Here's a little ascending triangle. And then it breaks through, it can't make it. And you can see we start printing these kind of candles here. And we get these more or less a doji candle. And you get this set up here. Well, it's a short right here, right? At this or the close of the candlestick, however you're trading it. The problem is this is a big candlestick. So by the time you get into this trade, you're already coming up onto this is a 50 period moving average that I personally put in. You can use whatever you want. It's just a longer term moving average or a medium term. So if this was a different candlestick, let's, for example, not that you would take this one, maybe you would. I don't know what's on the other side over here. But you get this and you get this, right? So you get this reversal candle. Price is pulled way far away from the moving average, right? Markets like to revert to the mean, which is the 50 period here. Like I said, you can use it when you want. You can short here. You get triggered in, you take a little bit of heat, and then it eventually does fall. But that's just something you might want to take a look at. It's not something I'm a big fan of doing, simply because when you're trading a corrective move, you cannot expect the same move up of the impulse leg. All right, so for most of you, keep it simple and just trade the way it's meant to be traded. Okay, so we look into August. This is all July. This should be covered in another video. We get a short. We skip the short. We go a few, almost in the month, and you get a long trade set up on this candlestick here. And it rises up to about 250 pips before we pull back here. And you may want to get out when you get an opposing signal, which people will say, well, that'll give you a lot back in terms of profit. Yes, it does. Sometimes. It won't always. You will get massive runs. For example, this trade here, you get in here and you don't get out to over here. It's over 500 pips, right? So do your testing. You know, perhaps you want to do that. You want to wait for a change in the, take a profit at a level such as this. You may want to use a Fibonacci type of approach where you draw them backwards. And you look at the extensions, this is 100% here. So, but oftentimes they'll go up higher. You got the 127 up in this area. Okay. So this is actually not a bad trade. If you think about it, it does actually run very, very well. Let's go to the pound yen. August, here we go. We see our moving average curling over. We have our long trade here. It gets automatically taken out. Okay. How you trade this might have been a loss for you because you're thinking, okay, well, I'm trading the slope of it. So you might have taken a loss on this trade. It goes about 140 pips. But again, you know, think about structure. When the price pulled back here, you know, if you're in an uptrend, you're looking at higher highs and higher lows, right? So we have our higher highs up here. We have a low, lower high, lower low, lower high, higher low. As soon as you get this and it starts breaking the price pattern of higher highs and higher lows, you could start considering that we could be heading into a ranging type price action. Okay, so just keep that in mind. But you know, just so keep it even here. Let's say you took this trade, you went up, came back, you take a bit of a loss here, right? Spin around here, price just plummets almost 500 pips. If you get out here, it's 370. And if you trade to structure, which is down in this level here, you know, obviously you don't go right to peaks and valleys. You don't do that. You've got a couple of areas here. This initial pullback. And I'll tell you right now, even if you're not trading this, doesn't matter what you're trading, always look inside of the extremes. Don't always go right here. Okay, well, there's my support area. Price will generally and oftentimes just go here, pull back, come up, pull back. If you look over here, price rebounds off of the inside horizontal trend line. Okay, so some good pips on this trade as well. I can't argue with that. So we're looking at about 500 pips here. Let's move on. Euro US dollar, almost everyone's favorite, not mine. August, here we are here. Well, we're already in a big trade from here, which runs, before we get this reversal here, well, we go from 1467 all the way up to 1737. It's a good trade. But again, let's say you missed this for whatever reason, right? Let's just stick with August. We have our short trade here, which we don't take because our moving average is up. We have our entry on this candle here. We have a bit of a pullback, so we rise up about 155 pips, pulls back here, and so you put you underwater. Your stop loss should not be in this area, but again, and we've already taken out this high, so your structure would be upper structure, pulls back, comes up to this high over here, and this trade is up about 175 pips right now. Let's take a look at the Aussie US. Where are we in August? A downtrend, we don't take it, right? Unless you're trading counter trend. And here's another example of what I just spoke about. Price here, pulls up, pulls back, doesn't get to here, and then drops. Think of it as a head and shoulders formation, and you're looking at the right shoulder that you're looking to take advantage of. Anyways, this trade here, on this thing here, it's a small candle, so maybe you raised your stop, your order to get in here, or maybe you just said, I'm just going to stick to the rules and just go here, and you did that. Immediately took heat, 65 pips, and then rallied up for 200 pips. So you, and if you just trade it up to structure, it's 140 pips. How you do your stops, you can use ATR, you can use below swings. That's entirely up to you how you decide to do it. Let's take a look at something that's been on fire, and let's see if we could have been in this trade. It's US dollar, Canadian dollar. Here's August. Wow, what a trade. Let me just move this up here. If you short here, hypothetical, right? Right to lows, 850 odd pips right here. Pulls back up, and here's your other short trade. Let's take a look here. So this one starts, the first one we just looked at started way back, so we don't look at that trade. This is a counter trend trade up against our 50 period moving average. Here you go here. Sell the break. Right now we're at 530 pips. See, so these aren't cherry picked. These are just my symbols on the side of my MetaTrader here. Doesn't matter what I look at. Let's just grab CAD yen and see what happened there. We have a flat moving average, so sometimes you may not want to trade in that, and totally understandable, because when this setup comes in, it is flat until we get up over here. But of course, that's way too late. We don't want to do that. We don't want to trade south. There is a long trade here on a this. If they're filled like this, it's a bearish candle, so it does pull back. I mean, sorry, it does go up a little bit and then pulls back. But again, depends on how you trade these kind of candles. It's not closing bullish, it's closing bearish. Maybe in your testing, it's just an idea for you. I just thought of it. If you're trading a bearish long entry, for example, you would want it the price to take out the highs. If it closes green like this one did, it's not the setup candle, you get in here. So if this was just over here a little bit more, you'd still get in this trade and have it pull back. But it's just an idea for you to test in your own testing. But you know what? I got no problem with losers. You're going to have losers. And that actually loser came off of a run that rose up over 650 pips. You know, after you get these big moves in price. So another thing you can look at, when you get big runs in price, you have to expect some sort of consolidation. And you can just use plain old price action trading. You have your highs, right? And you can see right here, we're starting to range anyways, okay? Just another thing to put up there, right? I'm just going to keep this video nice and simple. I'm not going to get into the basics of it, of technical analysis applied to it. I think I've done that in other videos. But as you can see, it's well over 1,000 pips in the month of August, depending on how you trade this, right? So again, for those people that have bought it and were upset, I tell you right now, the biggest problem that you did is you took these trading signals blindly. You cannot take any signal blindly, such as this, okay? You've got to understand a little bit of technical analysis. It's not very difficult. Make sure you're trading in the direction of the trend, and forget these counter trend trades. You know, forget them, right? Unless you can find a way to, okay, well, here's my resistance level. We got to pop up, right? After a big move up, it failed, breaks the lows. You know, I can look to trade. Oh, here's my first setup, but by then that comes in. Yes, it does fall down quite a distance, but you're just breaking out of this range right here. All right, so it's standard technical analysis. You know what? Pick up Pip Wizard Pro. Why not? I think it's a decent, simple strategy if you understand a little bit of technical analysis. It helps. But the biggest thing is the moving average. Put some sort of moving average on this chart, because you need to have some idea of trend. If you don't, you know, you're trading in the wind. You don't want to be doing that. And there might be other ways you could do it as well. Maybe I'll cover in a different video using multiple time frames with this. But for now, let's keep it nice and simple. All right, pick it up. Do some testing.